Welcome back. You're watching Lunch Money. The market's up 0.75% at 74.15. It's really the commodity plays that are doing well. Also doing well are the capital goods stocks, largely led by ABB's numbers, and ABB is a big outlier in a market like this. Given that, let's quickly look beyond and get you a management. KKR has invested 150 crores in 2 Sunteck Realty projects in Mumbai. Joining me now is Kamal Khetan, CMD of Sunteck Realty. Kamal, thanks so much for joining us, and good to hear of the capital infusion or a private equity deal in the luxury segment of real estate, which has been under pressure as an industry. Can you take us through the projects and what this money would mean in terms of getting it executed?
So these projects, if you are, you know that this is a Signia Isle and Signia Pearl, the part of our BKC development, which includes 3 projects: Signature Island, Signia Isle, and Signia Pearl. The investment which has come is in Signia Isle and Signia Pearl, and this money will be used for the growth capital and to buy distressed assets. And this is the beginning of the relationship with KKR, and the idea is to look for partnership for the future acquisitions.
Okay, so when you say to buy distressed assets, what do you really mean? Are you saying looking at acquiring others, or developing these? I mean, can you give us some clarity on that?
So these projects are self-funded. There is already a sales which have happened that more than 70% of the sales are already done in both these projects. So the cash flows are positive. So we don't need money for these projects. So this money has been taken to acquire new assets.
What are you looking at when you're looking at new assets, Kamal? Because as I said in the introduction, the luxury segment of the market has been the one worst impacted by the years of slowdown. Are you finding good assets at a good valuation at this stage? What's the market looking like?
If you talk about our project, BKC, if you see quarter on quarter, we have been able to do good sales in these 3 projects. This is something we have tried to create exclusivity. If you see some of the projects which, if it is established as a luxury project, then they start commanding a premium, and this is in the CBD of Mumbai today, Bandra complex, and any high-end projects in the CBD, high-end residential projects that commands a premium, and there is a good demand for the, I believe, residential in BKC in this micro market.
Right, but I'm not talking about your experience over there, but I'm saying if you were to acquire assets and distress assets of other real estate builders, are you seeing a lot of interesting opportunities from other realtors of luxury products which have not been able to sell, and hence is that going to be one of your target areas? Yeah, definitely.
So we don't see pressure overall. Definitely there is we are not only looking at a luxury means a very high-end luxury. It's not necessarily the ticket size of 40-50 crore or 30 crores what we are doing in BKC. So luxury, what we can do, like what we are doing in Sunteck City, Goregaon, so where we are doing a ticket size of even 2 crore, 1.5 crore or 3 crores. So we are acquiring the projects which are of a lower ticket size, and that has a good demand. And if you see in the past, if some of the good developers, if they have done the new launches, and if they are a good developer with a good brand, and if the people are confident about the execution of the project and the credibility and the financial stability of the developer, then there is no problem of sales. I don't see there is a problem, and there are some developers which have a balance sheet problem. So we want to take the benefit of that. Our balance sheet being strong and we are having a good cash flows, we'll like to maximize on that.
Right, that's interesting, Kamal. Tell me, what kind of percentage stake is KKR taking for the 150 crores that they're putting in?
So it's a equity deal, and very frankly, it's something. If you convert into, it's a complex. It will be difficult to explain, but it's a kind of the area what they have taken. It's close to 5% something area.
5% stake in the company.
No, it's not in the company. So it's a kind of a area what they have taken, and that's a upside is there, like equity, and the downside is also there. So
they are coming in as partners, literally. And I know KKR has been doing interesting, funding arrangements in the real estate space. So you're saying that they're coming in as partners, where they have a certain area within the real estate pie that you have.
So correct.
Okay. Now, tell me something, Kamal, what is your take on the real estate market in Mumbai, especially the luxury segment? And I'm not talking about Sunteck, because you're also blessed to be in a good location, which is BKC. But on the whole, do you see a pickup in real estate prices which was what the industry has been waiting for?
So I don't say the prices will go up substantially, but I see from last 6 months. So if you see, there is a stable pricing. Market has stabilized, I feel, a lot, and we see the growth opportunity coming in next 6 to 12 months. And if you see the luxury segment, in some micro markets, definitely there are pressure. And if you you rightly said that there is no problem in big case either. So we really feel if there is a good project in real South Mumbai. South Mumbai means beyond from the Worli towards the south, not the central Mumbai, but real South Mumbai. There is a good demand, and if you go to the western suburbs, I see there is a good demand.
Kamal, is demand picking up in markets across, not just in Mumbai? I'm saying because in Mumbai we have a tendency to be very myopic about real estate prices. And what's the prospect for the industry according to you? Because many of these companies have been going through a rough patch, and yes, there's some private equity deals, but that's not been enough.
I think there are enough private equity deals. Definitely, there are going on, and if you're hearing a lot of private equity, I think every week we are hearing one deal from the private equity side, and KKR has similarly invested, and they are also people are bullish. And if you also see, there is a good uptake in the commercial demand which has come. So Sunteck is also looking at doing a lot of commercial. From the company side, and so we would like to also invest in a lot of money into the commercial as well.
You have a deal with two other players. One is with Ajay Piramal's real estate company, as well as Kotak on the money raising side. So I'm going to ask you, how is this KKR relationship likely to progress? Is this going to be a partnership which will build on, and is there any visibility of more money coming in?
Yeah, definitely. So we have, if you see our track record, we have not gone and partnered with many funds. So in last 7 or 8 years, how Sunteck has developed, they have stick to two partners. One is with Piramal's and other with the Kotak Realty Fund. And so now when the company has grown, and we feel that if we have to grow exponentially and we have to take this benefit of this market, so we definitely need a third fund. And this is definitely a starting of a new relationship with KKR, and we're looking at a long-term relationship.
And have they evinced interest in increasing the money input over here in terms of money invested over the next year or so? Or is this the only tranche that you're looking at right now?
No, definitely. If you see the press release, we are looking at a long-term relationship, and we are looking for more money coming in for the many other projects. Okay.
Okay, Kamal. Thanks so much for joining.
Thank you, Vinita.
That's as much as you can get from Kamal on the future money flows coming in from KKR and two other funds, of course, the Piramal Group and the Kotak. So those are the two other alliances Sunteck has done. The stock has been climbing up through our conversation, up 3% in trade today. Well, we slip into a short break. Up ahead, we check out what's happening in the European markets, and we also get you a technical check with Vaishali Parekh.